Saudi Arabia led a coordinated production cut by major oil powers on Sunday, despite U.S. pressure to pump more crude, saying they were aiming at market stability. Cuts by the Saudis, Iraq, UAE, Kuwait, Algeria, and Oman from May to the end of the year will total more than 1 million barrels per day, the biggest reduction since the OPEC Plus cartel /2 million barrels per day in October. Russia, a member of OPEC Plus, said it was also extending its cuts of 500,000 barrels per day to the end of this year, calling it a responsible and preventive action. A Saudi Energy Ministry official emphasized that this is a precautionary measure aimed at supporting the stability of the oil market, the official Saudi press agency said. The cuts were made public in a series of statements from different countries. The output reductions are on top of a controversial decision in October by OPEC and its allies, including Russia, collectively known as OPEC Plus, to slash production by 2 million barrels per day. That reduction, the biggest since the height of the COVID pandemic in 2020, came despite concerns it would fuel further inflation and push central banks to hike interest rates even more. This voluntary initiative is a precautionary measure taken to ensure market balance, said UAE Energy Minister Suhail bin Mohammed Al Mazroui, according to the official WAM news agency on Sunday. Saudi Arabia will cut 500,000 barrels per day, Iraq 211,000, the UAE 144,000, Kuwait 128,000, Algeria 48,000, and Oman 40,000, each country announced. The statements came a day before OPEC Plus is due to hold a joint ministerial monitoring committee meeting on Monday via video conferencing, according to the UAE. The cuts were announced despite calls from the United States to raise production as consumption rises and as China, the world's biggest oil consumer, reopens after its COVID shutdown. As world economies recover, we'll see more consumption. And therefore, we'd like to see supply meet demand, said Jose Fernandez, the U.S. Undersecretary of State for Economic Affairs, Energy, and the Environment, on the sidelines of the CERAWeek Energy Conference in Houston, Texas last month. We would like to see more supply of crude globally, including from OPEC Plus, Fernandez said. OPEC Plus consists of 13 members of the Organization of Petroleum Exporting Countries and 11 non-OPEC allied countries. U.S. President Joe Biden has regularly called for an increase in the OPEC Plus output after Russia's invasion of Ukraine sent prices soaring. OPEC also raised its world oil demand forecast for 2023 in February, saying it expected demand to grow by 2.3 million barrels per day to an average of 101.87 million barrels per day this year. Oil prices last month fell towards $70 a barrel, the lowest in 15 months, on concern that a global banking crisis would hit demand. Still, further action by OPEC Plus to support the market was not expected after sources downplayed this prospect and crude recovered towards $80. The latest reductions could lift oil prices by $10 per barrel, the head of investment firm Pickering Energy Partners said on Sunday, while oil broker PVM said it expected an immediate jump once trading starts after the weekend. I expect the market to open several dollars higher, possibly as much as $3, said PVM's Thomas Varga. The step is unreservedly bullish. Last October, OPEC Plus had agreed to an output cut of 2 million BEP from November until the end of the year, a move that angered Washington as tighter supply boosts oil prices. The U.S. has argued that the world needs lower prices to support economic growth and prevent Russian President Vladimir Putin from earning more revenue to fund the Ukraine war. The Biden administration said it sees the move announced by the producers on Sunday as unwise. We don't think cuts are advisable at this moment given market uncertainty, and we've made that clear, a spokesperson for the National Security Council said. The voluntary cuts start in May and last until the end of the year. Iraq will reduce its production by 211,000 barrels per day, according to an official statement. The UAE said it would cut production by 144,000 barrels per day. Kuwait announced a cut of 128,000 barrels per day, while Oman announced a cut of 40,000 barrels per day, and Algeria said it would cut its output by 48,000 barrels per day. Kazakhstan will also cut output by 78,000 barrels per day. Russia's Deputy Prime Minister Alexander Novak also said on Sunday that Moscow would extend a voluntary cut of 500,000 barrels per day until the end of 2023. Moscow announced those cuts unilaterally in February following the introduction of Western price caps. An OPEC Plus source said Gabon would make a voluntary cut of 8,000 barrels per day, and not all OPEC Plus members were joining the move, as some are already pumping well below agreed levels due to a lack of production capacity. After Russia's unilateral reductions, U.S. officials said its alliance with other OPEC members was weakening, but Sunday's move shows the cooperation is still strong. A new world order could be emerging as economic powerhouses increase their efforts to distance themselves from U.S. dollar hegemony. According to reports, a top Russian official has claimed that the BRICS alliance is working on creating its own currency. BRICS is an acronym for 5 leading emerging economies: Brazil, Russia, India, China, and South Africa. State Duma Deputy Chairman Alexander Babakov made the comments at the St. Petersburg International Economic Forum event in New Delhi, India, according to local reports. Babakov reportedly stressed the importance of both nations working towards a new medium for payments, adding that digital payments could be the most promising and viable. He also said the currency could benefit China, other BRICS members, and not the West. This week, former Goldman Sachs chief economist Jim O'Neill called on the BRICS bloc to expand and challenge the dominance of the dollar. In a paper published in the Global Policy Journal, he wrote the U.S. dollar plays a far too dominant role in global finance. A BRICS currency is not a new concept. In 2019, Cointelegraph reported that members of the bloc were discussing the creation of a new digital currency for a unified payment system. In a related development this week, China and Brazil reached a deal to trade in their own currencies. The move will remove the U.S. dollar as the intermediary, further empowering both nations to distance themselves from the world's reserve currency. According to reports, the agreement will enable China and the biggest economy in Latin America, Brazil, to conduct their trade and financial transactions directly. Chinese yuan will be exchanged directly for the Brazilian real and vice versa instead of going through the greenback. China is racing ahead with its CBDC project, and crypto adoption in Brazil is growing following the legalization of it as a payment method in the country late last year. Meanwhile, the U.S. remains determined to continue its war on crypto as financial regulators tighten the screws on the embryonic industry. The real question is, how far will the U.S. go in defending the dollar? Let us know your thoughts and opinions in the comment section below. iTrust.capital is America's #1 crypto IRA platform. It allows users to buy and sell cryptocurrencies from their individual retirement accounts with low fees, tax-advantaged crypto accounts, and great customer support. iTrust.capital has gotten even bigger, with over $6 billion in transactions and more than 175,000 accounts created. All thanks to its wide range of exciting features, especially the new digital asset staking feature. Users can now stake Polkadot on iTrust.capital for up to 9.5% APY. This is a staking offer from a U.S.-regulated network and is completely different from offers from lending platforms like BlockFi and Celsius. Such platforms earn yield via lending rates, a venture that has proven risky and unstable. With iTrust.capital, the yield comes from staking rewards, a risk-averse way to earn a yield on your digital assets holdings. In less than 2 weeks after the beta launch, thousands of clients have staked 25% of the Polkadot on the platform, and it will only get bigger. iTrust.capital currently offers around 30 cryptocurrencies, including Bitcoin, Ether, and Cardano. The retirement account platform plans to add staking support for more cryptocurrencies in the coming months. This is a wholesome offer you do not want to miss, especially while preparing for retirement. It is a long-term investment that can help you achieve your retirement goals much faster while enjoying the vastness of the cryptocurrency industry. Please click the link in the description box to register on iTrust.capital and enjoy all its exciting features. Thanks. Also, don't forget to hit the like button, subscribe, and turn on notifications. Thanks for watching.